Hi guys, welcome back to another weekly analysis video. In this video, we'll talk about Nifty structure and also the plan for next week. What happened last Friday? Thursday, we had a very good rally in the market, Sensex expiry, BSE expiry, and then all of a sudden we had a good fall the next day. What happened to all the bulls here? That's the question. Everyone feels like this is a pump and dump in the market. It took one day for the price to go all the way up, and then the same time the next day to immediately retrace it. So yes, this does fall under the category of a pump and dump, but this is a small pump and dump, not a big one. Now, what are the highlights for next week? What did the level do here? The price broke out. How do we plan for next week? It's very simple. The first highlight was your 26,100. This is your 26,150 call option. Like we discussed in the midweek update as well as in the Telegram group, I told you that from 50 to 100, this is the price of the strike option. This is your November month end expiry, which is in a couple of days. Here, I saw unusual activity based on my own volume analysis research. I've seen some unusual activity and there was a lot of buying activity happening here by the big players. Now, I told you in the midweek update that there are only two possibilities this happens. It happens just before a bottom, or else they are targeting the upper level here. This is what exactly I told you. And what did the price do? Yes, it rallied and hit this level. All right. So what did I do here? I took a small scalp, not much. I booked out my profit here. I shared all this in the Telegram group, and I let the remaining position try to capture the up move in Nifty as well as in the options via some other positions of option selling. Anyway, here this is what happened. We saw unusual activity, and yes, for December month also there are some unusual activities in the options. I'll talk about that. Right now, what is our plan? What are we looking for? Very simple. I told you that I think this is the third time I'm telling you in 3-4 couple of two videos, that past two videos, that this resistance is not a normal level. This is not a normal simple level of resistance. This is a GAN level. Now GAN level is, again, different methods to remove GAN levels. In my own research, my own method, we got 26,030, 25,965. This zone is triggered by time. What do I mean by triggered by time? It means it forms, it price has been activated here on a specific time zone, okay, in the month. So what did we plan? What was our plan? This plan was simple. If the price wanted to rally above this, it has to go up, and then we are not chasing this. We are not chasing positional trades here. The logic I told you was very simple. When the price breaks the resistance, you want it to come back and retest it again. So you want the resistance to get converted into a support zone. And then this is where you are planning for a positional setup. Very simple logic. This is what we've been discussing so far. We'll discuss that now. And how do we plan further from here? Very simple. Same resistance zones for next week, same important key zone. We want it to convert into support. Those who are bulls and who are planning for a long side position, you want to check if the price comes back here in this zone and then takes an upswing. This is what we're targeting, this previous swing high, or at least ATH will come for sure. 26,300 level, at least we're looking for that. This simple way is, very easy to capture a swing, but you have to sacrifice some points. Like you have to sacrifice 50 points. You are not looking to capture the bottom. You are not looking to capture the bottom here. You're looking for confirmation level. This is the same method we have been discussing again. What you're going to do is, this level, you draw the range wherever the swing low, wait for price to start bouncing. Then what you do is draw the 50% of this latest fall from this level. Okay, 26,179 level. From here, whatever fall comes, wait for price to first bounce, then draw the midpoint. You want price to sustain above this. Only then your target on the upside will come. This becomes a positional bet for us. Now, there are some players who say, I want exactly to capture this bottom. So you can look for setups here. The same logic, you can look for a setup in this zone itself. Okay, I want to keep an SL of 30 points only. I don't want a bigger SL. I don't want this confirmation. This is a risky behavior, but again, there are people who want to do that. Okay, now you have understood clearly on the upside how to look for a setup. Second point, question here is that what if price never touches here? What if price never comes here and starts to go higher? I've told this to you again in the past 2 videos. If this resistance does not turn into a support zone, if this does not happen, it is no point trying to capture this a positional this up move in a positional bet. Look for intraday setups only. Something similar happened here where price just went all the way up without testing the zone again, and I told you that it is better to stick with an intraday setup only. Here what happened, the next day immediate fall comes. Okay, so those who try to take positional bets here looking at this rally, you must have got trapped here. Many retailers got trapped in this move. Some are trapped because of the breakout, some are trapped after the breakout. Regardless, you have to follow some price action method to understand the structure. So right now, simple analysis, if the price never touches this zone, simple, you can't look for a positional bet, you have to look for intraday setups only. All right, this logic should be very clear. Now the final logic is, what if some news event happens, some deal, some sanctions, whatever happens throughout the weekend, and Monday we see some volatile move. In that case, let this price break down, come back up, this act as a resistance again, and then we can look for a setup. Yes, sometimes people can say that, yeah, it might look like an inverted head and shoulder, your neckline, this is your target for the downside. Okay, all that is fine, but yes, what we want is price to once come back in this zone. Okay, and then we want to look for a down move. You want to target this down move here. Simple, because you don't want to again be trapped in a fake out. You don't want to be trapped in a fake out here. Simple as that is the entire logic we're using. There are a lot of fake outs happening recently, more than ever before. Maybe it's because of the increased algo activity, but logically, this is how we are looking at price action so far on a higher time frame. Those who follow the wave theory and those who are looking at structures on the higher time frame. On a higher time frame, it's very simple. Even if price rallies from here near 25,000 or 26,500, 27,000 also, regardless of whatever happens, I have told you, price will once come back to 25,153 level for sure. This is the structure in the market right now, regardless of what happens on the upside. So that is why I told you that it is not safe to carry big positional long side bets at this position. And if you do want to do, you have to plan for only 300 points range. That is the reason why I have not discussed any big move so far. We're using the smaller time frame and connecting it with the larger time frame. We're looking for 300 point move on the downside or 300 move point on the upside in the weekly space. We have not discussed any big swing moves in the market. All right, keep that in mind. It's not difficult. Don't chase big moves at the moment. The real reason is, one of the reasons is this, and the second reason is, if I just show you the chart of your futures chart, this is your futures chart, and you see that price has still not crossed the previous high. Nifty has gone below, spot chart has gone above it. The futures chart has not yet crossed. Now you might say that this gap up is because of your contract change. When the contract changes from October to November, your futures chart acts a little bit different in the first day because of the gap up contract switching. What we're going to do is we're going to remove the contract switching. How do we do that? On the bottom, you see this BADJ, right? BADJ, that stands for adjustment, before adjustment. Okay, so when I turn that on, when I click it on, this gap here, it will get vanished. Let me do that and show it to you. Right now the gap has gone. What happened to the gap? It went away because we have adjusted for all the contract changes. Right now you see the structure, it looks more like Nifty's chart, spot chart. So this Nifty future chart has still not crossed in case of adjustment also. So this is the major confusion for many retailers and those who study wave analysis, is that how do we do our analysis when both charts are acting a little bit different? Nothing complicated. The structure is the same regardless of what happens. We are in a fifth wave. All right, we are in a fifth wave, and yes, market is tipped to fall once towards 25,153. Now the lower time frame analysis is where it is being choppy, extremely choppy. Here, don't commit to big moves here. Follow and focus on smaller targets like 300 points on the downside if you want to. If your target is here, and just follow 300 points and then review the structure again, review the price action again. Right now here I formed this swing low of 25,000. Let me just check the exact level here, 25,300 approximately. What you can do here is very simple. You can mark this either as an impulse. You can mark this as an impulse and it'll break away and go all the way up. Right now what I'm doing is my personal view that I am looking for an A wave here, a B wave. The C wave, I am taking it as a diagonal pattern. At the moment, this can change and there are some rules for the diagonal, and when that gets invalidated, we will have to change. But my entire analysis right now is based on this zone here, the GAN level. If it breaks below that, I have to obey the rules and I have to look for only downside setups. Okay, so this is the overall idea, guys, for next week when we go. And right now there is some unusual activity, like I told you, in the December month activity, December month options. The first unusual activity I saw was, let me zoom out here, it'll be better, at 27,000 to 27,200. This zone of December monthly expiry, December monthly, okay, 27,000 call option to all the way to 27,200 call option. Between these two strikes, I have seen a lot of buying activity. Same thing on the downside when we had a small fall on Friday. On the downside, I saw between 25,000 to 25,200 put option. This put option, which is nearly 1,000 points away. Correct? Same thing. This upside strike is 1,000 points away. This was the last update I gave you on Friday evening, that Telegram group. 1,000 points away. Big players are buying put options. Some big players are buying call options. What is the strategy they're trying to make? Now we have this piece of information. We have to decode this. We have to plan. We have to look at the structure, and then let us make a strategy for the month of December. We're going to do that in the next video. Stay tuned and make sure you're following this channel so that we can give you an update, a timely update. You will get all the updates on time, and definitely leave a like and comment. What you're going to do right now is you're going to complete the study material, the premium study material available on YouTube, and then go and watch the next video, which will be released soon, regarding your December monthly option strategy. We're going to try and decode what is the reason behind this with connection with the market structure and option strategy. We're going to discuss that. I'll see you in the next video. Till then, take care and definitely be safe.